here. Michael, what is your take on a value consumer right now? What are you gleaning?
Yeah, well, look, consumers are definitely trading down, and everyone is feeling the pinch. That being said, Target, from a management perspective, is just a horribly run company, right? Consistently missing the mark, always hearing about huge stories from them that are a symptom of what I would say is poor management of a kind of spectacular brand, spectacular company. I really enjoy shopping at Target. I think most people that go in there like going in there. They find it's good value for the money. So why are they missing earnings? Why is there so much drama? And to me, it's management. And this goes back a long time to when they had an IT disaster where leaking a bunch of customer information. They've never been able to kind of get this right.
Michael, one word: Nvidia.
Oh, for all the marbles, right? And so when you look at Nvidia right now, the whisper number from the buy side, they want to see it's about $1 billion higher than the street estimates on revenue. So, that $25.5 billion number is what you want to be looking at after the close. Okay, I think they're going to beat that, and they're going to beat it comfortably. And the reason for that is when you hear from Microsoft, when you hear from Google, when you hear from Amazon, all saying they're beating their the cloud estimates by Wall Street handedly, and these are aggressive estimates that continue to go higher, and then they raise guidance against very aggressive guidance. It leads you to believe that Nvidia is not going to have a hard time beating these estimates, that the growth runway for this company is nowhere near over, and Wall Street also has a history of underestimating the size of these trends, the scope of these trends, and it's, what I like to say is those that say we're in an AI bubble are the same people that said the iPhone would never overtake the BlackBerry. And so a lot of investors out there have missed every major tech move because they're just skeptical, because it's hard to chart out exponential growth.
But I still miss my BlackBerry. There, I said it.
Taylor's a skeptic. She's a skeptic. No, I want to ask you about this, because Taylor's going to appreciate this too. We get Fed minutes today, okay? I don't think these guys have any reason to cut rates this year. But I think I hear you saying there's going to be one pre-election. Is that where you are?
Yeah, absolutely. Look, Jerome Powell, if you look at the history, like Jerome Powell from, the kind of the fall of 2020 up till now, he waited way too long during 2021 to slow down the expansion of the balance sheet, to eventually running off the balance sheet, to raising hikes in the face of rip-roaring inflation. Remember, this is just transitory. This is going to be gone. It's all due to supply chains. And then not really aggressively raising rates to really fight inflation, to now telegraphing and putting out that they're going to cut rates 6 times last October based on what? So, look, I think this is a hyper-political Fed, not a little bit political, and so we'll get at least one cut, and I think they can get away with that one cut, because that 25 basis points from where we are right now really makes no difference.
Right. Well said. Michael, thanks so much for joining us. Appreciate it.
Thank you for having me.
Let's take a look at some of these